Hello class, so I've decided to upload a lecture considering that we have difficulties meeting every Wednesday during our schedule. So you can just watch this video in your spare time because we need to catch up, especially that I'm planning to include as coverage for our preliminary exams, chapters 1 to chapter 3 of the book, as well as the reading assignments in your syllabus. So let's continue our discussion under chapter 1 with respect to the distinction of the contract of sale to other related contracts. So the first distinction we must make is that between sale and donation. So you know that donation is a gratuitous act. The consideration is the liberality or the love and affection of the donor to the donee. So unlike a contract of sale wherein the consideration is price on the part of the seller, while on the part of the buyer, it's the acquisition of ownership over the thing being sold. So that's an onerous contract. Another important distinction is that unlike a contract of sale, which is perfected by mere meeting of the minds or consent of the parties, donation is a solemn contract. What makes it solemn is that its validity depends on compliance with the solemnities or the form prescribed by law, and that is a public instrument. So a donation must be reduced into a public instrument by the donor and the donee. Otherwise, the donation is not considered as valid. Another important distinction is that in a donation, the donor is required to be the owner of the thing being donated at the time of donation, unlike in a contract of sale, wherein a seller may not yet have ownership over the thing being sold at the time of perfection of the contract. There are instances, however, when a donation will be governed by the law on sales. And that's when there is an onerous donation or a remuneratory donation. So what makes it governed by the law on sales is that in these kinds of donation, there are burdens, charges, or services imposed upon the donee by the donor. And in cases wherein the burdens, charges, or services imposed is equal or more in value than that of the thing being donated, then the portion in excess of the value of the burden, charge, or service imposed will be governed by the law on sales. Okay, because that portion of the donation is in fact onerous already on the part of the donee. So di na siya purely liberal na act by the donor, since the donee is required to do to render service or is burdened with certain acts, right? So with that regard, then the donation will be governed by the law on sales. So in the 2003 bar, this was asked from the examinees, and you already know the answer to this. Another contract that we need to distinguish with the contract of sale is the contract of barter. So there's just some provisions in the civil code providing for the rules when there is a barter. And that's Article 1638 to 1641. Also in the law on sales, in Article 1468, there is an instance when the consideration will consist partly in money and partly in another thing. So this article provides for the rules when we'll consider it as a barter and as a sale. So how do we apply Article 1468? So first, the consideration in that agreement in that contract must consist partly in money and partly in another thing. If the consideration is purely money, then you don't need to apply this article at all. Okay? So if the consideration is indeed consisting of money and a thing, then the second rule is to determine the intention of the parties. So if the intention is manifest, so the parties here either have agreed that their contract will be a barter or that their contract will be a sale, then you uphold their intent. Okay, you just disregard the values of the money or the thing. So automatic, you apply whatever the parties intended their contract to be. But if the intention is not manifest, if it does not clearly appear, then that's the instance when you apply the rules on valuing, on comparing the values of the money and the thing. So if the thing is more valuable than the money, then the contract is considered as one of barter. If they are of equal value, then it's a sale. And it is also a sale when the thing is less valuable than the money. So what is controlling in this instance when the intent is not clear, whether the parties agreed to have a barter or a sale, is the value of the thing. Kung mas valuable ang thing, barter. If 50-50 or if it's less valuable, then it's a sale. Okay, so in a barter, guys, a thing is being exchanged for another thing. While in a sale, the thing is sold for a price certain in money or its equivalent. So under Article 1641, it provides the rule that in the absence of a more specific rule pertaining to barter, then the default law will be the law on sales. Okay, except lang that we cannot apply Article 1403 sa paragraph 2 sa paragraph D and Article 1622 in a contract of barter. So illustrative case is the case of De Santos versus City of Manila. So what happened in this case? So the plaintiff here, Mr. Antonio G. De Santos, filed a suit against the City of Manila. So why did he sue the City of Manila? Because the City of Manila exchanged 5 parcels of land with Arellano University. Because the city needed to make a construction, needed to extend Claro M Recto. So they had a road project. Okay, and De Santos sued the City of Manila because he claims that a portion of those properties exchanged belonged to him. Because one of the lots adjoins the properties of Arellano University, and he wants to invoke the right of redemption or preemption provided in Article 1622. So Article 1622 states that whenever a piece of urban land is so small and so situated that a major portion thereof cannot be used for any practical purpose within a reasonable time, and having been bought merely for speculation, then whoever are the adjoining properties of that particular small urban land can exercise the right of redemption or also the right of preemption if no sale has yet been made. So the court here ruled that De Santos did not have the right of either preemption or redemption because the transaction between City of Manila and Arellano University was not in fact a sale but a contract of exchange. Nagbarter sila og byuta. So there's no application therefore of Article 1622. So principle of De Santos versus City of Manila, when the contract is one of barter, the adjoining owner of the properties bartered has no right to preemption or redemption. So next contract that we must distinguish is one of sale and one of a contract for a piece of work. So Article 1467 provides that if the contract involves the delivery at a certain price of an article which the vendor in the ordinary course of business manufactures or procures for the general market, then it is considered as a contract of sale, regardless if whether the vendor has the good in on hand at the time or not. Okay, but the same article provides that if the goods are to be manufactured specially for the customer and upon his special order and not for the general market, it is considered as a contract for a piece of work. So this article challenges us to determine whether the agreement of the parties is for the purchase of a good or a purchase of a service. Because a contract for a piece of work, guys, it's essentially a service contract. So how do we know that it is a simple contract of sale and not a contract for a piece of work? So Article 1467 is also known as the Massachusetts Rule. And in short, this article provides that if the order is made in the ordinary course of business, whether or not the good is on hand at the time of the order, it is considered as a contract of sale. However, if there is a special order and it is to be manufactured specially in accordance with the specifications made by the buyer or the client or the customer and not generally available to the market, then it's considered a contract for a piece of work. So in other jurisdictions, they have the New York rule and the English rule. And in the New York rule, it's very straightforward. If the thing already exists, it's a contract of sale. If not, it's a piece of work contract. And in the English rule, if the material is more valuable, then it is considered as a contract of sale. But if the skill is more valuable, then it is considered a contract for a piece of work. But in our jurisdiction, we need to apply the test of special orders because that's what's provided for in civil code. So in order for us to appreciate this test of special orders, we need to take a look at the case of Celestino Company versus Collector of Internal Revenue and the Commissioner of Internal Revenue versus Engineering Equipment and Supply Company. So what happened in the case of Celestino, guys, is that the case here involves resolution of the issue whether a taxpayer is liable for contractor's tax or simple sales tax. So Celestino Company is the owner of the Oriental Sash Factory. Okay, and it is engaged in the manufacturing of ready-made doors, sash, and windows for the general public. Okay, and the Collector of Internal Revenue assessed the Oriental Sash Factory of 7% percentage on its sales. However, Celestino invoked that it is only liable for 3% contractor's tax. So the issue that had to be resolved by the court is whether or not Celestino Company, who habitually manufactures doors, sashes, and windows for the public, subject to their specification to fill in an order, is engaged in a simple contract of sale with its customers or with a contract for a piece of work. So the court ruled here that Celestino and Company is liable for sales tax. And how did the court arrive at that conclusion? So the court said here that from the very start, Celestino Company intended itself to be a manufacturer of doors, windows, sashes, as it did register a special trade name for its sash business and ordered company stationery carrying the bold print Oriental Sash Factory. It did not put up a contractor's bond as required by Article 1729 of the Civil Code. And more importantly, Celestino Company did not merely sell its services. So the truth of the matter is that it sold materials ordinarily manufactured by it, like sash, panels, and moldings, although in such form or combination as suited by the fancy of the purchaser. So even if gi-assemble ni Celestino Company ang sash, moldings, and panels in accordance with the desired design of the customer, it does not, the new form that was assembled by Celestino and Company upon order of the customer did not divest the Oriental Sash Factory of its character as manufacturer. Because although the factory does not, in the ordinary course of its business, manufacture and keep on stock doors of the kind that are ordered by its customer, it could stock or probably had in stock the sash, moldings, and panels it used therefore. So granted nga pirmi siya na stock sa sashes, moldings, and panels, then it could be readily assembled in accordance with the desired specification of the customer. So that makes the Oriental Sash Factory engage in a simple sale business, not a contractor. So di niya ma-meet ang test of special orders. However, in the second case, kaning commissioner versus engineering equipment supply, wherein the taxpayer being assessed by the BIR is engaged in the design and installation of central type air conditioning system, pumping plants, and steel fabrications. The Supreme Court found here that engineering equipment was actually a contractor. And why? Why did the Supreme Court find that the taxpayer was a contractor? So the Supreme Court held that engineering did not manufacture air conditioning units for sale to the general public. And in fact, they imported items like refrigeration compressors, heat exchangers or coils, etc., and all the other parts and equipment needed in order to install the centralized air conditioning system that was required by their customers. So unlike the case of Celestino, na ang Oriental Sash Factory readily had stocks of sashes, panels, and moldings. Dali ra kay mag-assemble og door. In this case, the contractor had to import the equipment and parts needed to meet the order of their customer. So the test therefore, guys, is the inquiry is whether the thing transferred is one not in existence and which would never have existed but for the order of the party desiring to acquire it. Similar to the case of engineering equipment. They design centralized air conditioning systems. And each customer will have different needs. So unlike kay Oriental Sash Factory, there's a limit on the possible design that will be asked by customer. Kaya ang customer ni Oriental Sash Factory, mamili raman sad siya kung unsay stock dito ng mga panels moldings. And it's very easy to assemble a door given the stocks on hand in Oriental Sash Factory. Pero sa engineering equipment, they did not manufacture the aircon units or compressors. They had to import it. So although they had stocks of aircon units, it's not automatic that that will be the one that will be used or ordered by their customers. So therefore, guys, the rule is that in the first, the contract is one for work. Okay, but in the second, it is considered as a contract of sale because the thing would have existed and would have been the subject of sale to some other person, even if the order had not been given. Okay, so here are the essential distinctions between contract for a piece of work and a contract of sale. So the parties in a piece of work contract is the principal and the contractor. And goods are to be manufactured specially for the customer and upon his special order, and not for the general market. It's a sale of service. Okay, and it's not subject to the statute of frauds, and it gives rise to personal obligations, unlike in a contract of sale, real obligations. And the remedy is Article 1715. Article 17 provides that if there is a defect on the part of the contractor, he is obliged to correct that defect. And if he fails to correct the defect, then the principal can have the work undone or have the work corrected at the expense of the contractor. While on the other hand, in a contract of sale, the remedy is specific performance or rescission. So another contract we need to distinguish with the contract of sale is the contract of agency to sell. So in practice, guys, agency to sell agreements are often denominated as consignments for sale. And the essence of the agency to sell is the delivery to an agent of the thing, not as his property, but as the property of his principal, who remains the owner and has the right to control sales, fix the price and terms, demand and receive the proceeds, less the agent's commission upon sales made. So important distinctions between the contract of sale and agency to sell. So agent here will only receive the goods. There is delivery of goods to him, but he receives it and holds it in favor of the principal. The principal will retain ownership the entire time. Okay, and if there is a sale made by the agent, then the agent delivers the price to the principal. And if there is no sale, the agent can readily return the goods. So the agent will make no warranty and can only act according to the instructions of the principal. A contract of agency is generally revocable, and the agent cannot derive any personal profit. So an illustrative case will be the case of Keroga versus Parsons hardware. So what happened in the Keroga case? So Keroga and Parsons Hardware executed a contract for the exclusive sale of Keroga beds in the Visayan Islands by Parsons Hardware. So Keroga beds later sued Parsons Hardware for violation of that contract. And they said that Parsons Hardware violated the obligation not to sell the beds at higher prices than those in the invoices and other contractual violations. So Keroga's belief is that Parsons Hardware is its agent for the sale of its bed in Iloilo, and that their relationship was that of commercial agency. So the issue to be resolved in this case was whether or not the contract is one of sale or of agency. So the ruling here in the court is that the contract was one of sale. And what made the court conclude that it was a contract of sale was because not a single one of the clauses in their contract conveys the idea of agency. So even if the contract used the words commission on sales, the court considered that particular clause agreement na commission on sales as a mere discount on the invoice price. So discounted siya pagkapalit ni Parsons Hardware. And that particular discount is not a commission as contemplated by law on a contract of agency. So the court held that the word agency used in Articles 2 and 3 only expresses that the defendant was the only one that could sell the plaintiff's beds in the Visayan Islands. With regard to the remaining clauses, the least that can be said is that they are not incompatible with the contract of purchase and sale. So what made the agreement between the parties as a contract of agency was the fact that the Parsons Hardware had to pay for those beds regardless of whether or not they were able to sell it. So that's a clear indication that the contract was a simple sale and not an agency to sell. On the other hand, in the case of Puyat and Sons versus Arco Amusement Company, the court here also found that there was a simple contract of sale and not agency. So the court held that there was no incompatibility between a contract of sale with regards to the contract of the parties. And the Supreme Court held that the Supreme Court held that so dahil mag-lecture guys. Di ko ka recits ninyo ba? Okay, I'll ask myself the question, then I'll just still be the one who'll answer it. So bear with the pauses ha, because I'm trying to not look like I'm talking to myself. So in this case, guys, Puyat and Sons ordered in behalf of Arco sound reproducing equipment from the Star Piano Company. So si Arco ni order siya og sound equipment from Puyat. But Puyat will actually acquire it from Star Piano Company. And in their agreement ni Puyat and Arco would pay Puyat, in addition to the price of the equipment, a 10% commission plus all expenses such as freight, insurance, banking charges, cables, etc. Okay, so Puyat completed this particular order from Arco, but Arco later discovered that the price quoted to them by Puyat and Sons with their two orders was not the net price, but rather the list price, and that Puyat was able to obtain a discount from Star Piano Company. So Arco wanted to obtain a reimbursement from Puyat and Sons, and Puyat and Sons refused to reimburse. So this controversy between them reached the courts, and the court held that the lower court held that their agreement was outright purchase and sale. Okay, and they absolved Puyat and Sons from reimbursing Arco. But Arco insisted that Puyat was acting as its agent to purchase equipment from the Star Piano Company. So in the appellate court, gi-reverse nila ang ruling sa lower court. They held that there was contract of agency between Puyat and Arco. The Court of Appeals further held that Puyat was guilty of fraud in concealing the true price and was liable to reimburse Arco of the overpayment that they made. So when it reached the Supreme Court, the court held that there was a contract of sale between the parties. So the fact that whatever unforeseen events might have taken place unfavorable to the defendant, such as change in prices, mistake in their quotation, loss of the goods not covered by insurance, or failure of the Star Piano Company to properly fill the orders as per specifications, the plaintiff might still legally hold the defendant to the prices fixed of $1,700 and $1,600. So this particular provision, guys, in their agreement, court held that it is incompatible with the pretended relation of agency between the petitioner and the respondent, because in agency, the agent is supposed to be exempted from all liability in the discharge of his commission, and he acts only in accordance with the instructions of the principal. So the court held that the 10% commission na madawat ni Puyat from Star Piano Company did not make Puyat an agent of did not make Puyat an agent of Arco. So this 10% commission is considered only as an additional price which the respondent bound itself to pay, and which stipulation is not necessarily incompatible with the contract of purchase and sale. So in the 1999 bar, this was asked. So dili automatic, guys, na kung magamit ng party sa term na commission, that there is an agency between the parties, right? So try to answer for yourself kaning bar question. You just think of the ruling in Keroga and Puyat. Okay, so can a contract create both a sale and agency relationship? So yes, it's possible. And that's what happens in a manufacturer-dealer agreement. So a dealer will receive title to the merchandise that was ordered from the manufacturer. And that transaction constitutes a contract of sale. But the dealer is considered an agent of the manufacturer to the extent that the dealer is authorized to pass on to the ultimate purchaser the limited warranty of the manufacturer. Okay, so another distinction is between a sale and dasyon and pago. So don't get confused, guys. Dasyon and pago is not a contract. Okay, but it is a mode of extinguishing an obligation in accordance with the law on obligations and contracts. In dasyon and payment, property is alienated to the creditor in satisfaction of a debt in money. And since that's the case, Article 1245 provides that it is governed by the law on sales. Because there is alienation, there is transfer of ownership in order to satisfy an existing debt. So illustrative cases will be Viuda de Jaime versus Court of Appeals and SSS versus Atlantic Gulf and Pacific Company. So what's the distinction between sale and dasyon and pago? So sale is a contract, of course, and as already mentioned, dasyon and pago is a special mode of payment. So prior to the actual delivery of the thing being alienated to satisfy a debt, to settle a debt, there is no separate contract between the parties except for their debt agreement. Okay? It's a mere arrangement to make a payment. In sale, the object is the subject matter or the thing sold, while in dasyon, the object is the thing offered as an accepted equivalent of the performance of an obligation. In sale, the cost is the price or the thing sold, while in dasyon, the cost is extinguishment of the debt or the object acquired in lieu of the credit. In sale, there is no pre-existing credit, but in dasyon, there is pre-existing credit. In a sale, obligations are created, while in dasyon, obligations are extinguished. And there is more freedom in fixing the price if there's sale. But in dasyon, there is lesser freedom. Okay na may pre-existing na utang. So in Viuda de Jaime versus Court of Appeals, we are introduced here with concept of dasyon and pago. And the court ruled here that the undertaking to effect a payment through dasyon and pago really partakes in one sense of the nature of sale. That is, the creditor is really buying the thing or property of the debtor, payment for which is to be charged against the debtor's debt. So that being the case, the essential elements of a contract of sale, namely consent, object certain, and cost or consideration must be present. So in its modern concept, what actually takes place in dasyon and pago is an objective novation of the obligation, wherein the thing offered as an accepted equivalent of the performance of an obligation is considered as the object of the contract of sale, while the debt is considered as the purchase price. Purchase price is the debt. The object is the thing offered as an accepted equivalent of the performance of the obligation. In any case, common consent is essential prerequisite, be it sale or novation, to have the effect of totally extinguishing the obligation. Okay, and in The second case in SSS versus Atlantic Gulf and Pacific Company. This case shows us that prior to the actual delivery of the thing owned by the debtor, prior niya ihatag ang iyahang property to the creditor in dasyon, there is no contract yet between the parties. So the contract will only arise once there is actual delivery of the thing that is being offered as accepted equivalent of the performance of an obligation. So if there is no actual delivery and transmission of ownership, then there is no dasyon. There can be no extinction of an obligation on the part of the debtor. Okay, we need now to distinguish between dasyon and pago, which is in the nature of a sale, and this pactum commissorium, which is a prohibited provision, prohibited stipulation under the Civil Code. So Article 2088 prohibits the creditor from appropriating the things given by way of pledge or mortgage, or from disposing of them. Any stipulation to the contrary is null and void. Okay, there are two elements for pactum commissorium to exist. So first, there must be a pledge or mortgage, wherein property of the debtor, property of the pledgor or mortgagor is pledge or mortgage by way of security for the payment of a principal obligation. Okay, and the second element of pactum commissorium is that there is a stipulation for automatic appropriation by the creditor of the thing, pledge, or mortgage in the event of non-payment of the principal obligation. So, illustrative case here will be the case of spouses Pen versus spouses Julian. So, in this case, guys, the Supreme Court here had to distinguish between the dasyon and the pactum commissorium stipulation because as we already know from the previous case, dasyon and pago is supposed to extinguish an obligation. But in this case, even if there was purportedly dasyon and pago, the court found that the debt of the debtor subsisted despite transfer of the property to the creditor. So since there was no extinction of an obligation, then the stipulation allowing the creditor to acquire ownership of the property for non-payment of the debt is considered as a pactum commissorium. So therefore, to have a valid dasyon and pago, the alienation of the property must fully extinguish the debt. Okay, diba? That's crucial in dasyon, that the thing being offered to satisfy the debt is accepted equivalent of the performance of an obligation. So there must be consent. Once the debtor will alienate the property to the creditor, then the debt must be fully extinguished. So let's take a break. I will upload another video to continue our discussion.